I'm here in San Antonio for REITs REITwise, our 2019 Law, Accounting, and Finance Conference. Joining me today is Ross Prindle, Managing Director and Global Head of Real Estate Advisory Group with Duff Phelps. Ross, thanks so much for joining us.
Pleasure to be here.
Now, can you start by giving us a brief overview of how the new lease accounting standards will impact REITs?
REITs are primarily lessors, so it's not as big of an effect as it would be for the tenants than it is for the REITs themselves. However, several REITs have ground leases and other sort of leases that will come into play. So they're affected by the standard. They're going to certainly have to deal with it from a landlord perspective or from a lessee perspective with ground leases. So they're going to have to, or they had to, capture all of their lease data, put it in a format to apply an incremental borrowing rate to it, and put it on the books as a liability. So most have done it. The public REITs have all done it so far, and the private companies have a little bit of some time to do it. They got till next year. But the biggest effect for them, as I mentioned, the ground lease thing is not that big of a deal, right? Unless you have a tremendous amount of ground leases, it's not a big effort. But the biggest effect for them is their tenants have to sort of deal with it. And there still is some questions about whether it's going to drive behavior about the type of lease term that tenants would like because of the fact that they have to deal with a leasing standard. And every time they sign a new lease, they have to put it on their books. So, and the liability itself is larger the longer term of a lease.
And what are you expecting to happen regarding REIT valuations over the next, say, 18 months?
Well, I think I'm positive. I think there's some opportunities out there, I think in some of the retail REITs, we've seen, some of the stock prices sort of lower based upon people's thoughts about retail. And I think there's probably a little bit of a swing that may be too much in some cases, because, you have some, retail REITs that have some pretty good management teams and good strategies, and I think they're probably unfairly punished by the thoughts of retail in general. However, there's also some problems with retail bankruptcies that are still heading forward, and some of the net lease REITs that are sort of affected by that have a lot of retail. It's going to be tough for them a little bit. But once we manage through that, we should be okay. If you're a REIT that has a lot of non-grocery anchored shopping centers in tertiary markets, those cap rates have come up quite a bit, so it's tough. But in general, I would say that multifamily doing quite well, right? Industrial doing really well, right? And office is sort of chugging along as white-collar employment growth is pretty good. And, our unemployment rate is pretty low, and it's forecasted to be low. So I'm pretty positive about REITs going forward, and I think there is going to be some opportunities on some of these that have maybe been unfairly punished, like retail, for folks to buy in. And I think it's going to be a good, 18 months to 24 months from now for REITs. I think it's going to be very good.
Great. And what do you think will be the dominant story or trend impacting the industry over that time?
Wow, the dominant story or trend. I think people are still going to be focused on the Amazon sort of effect and the online sales. And I think that sort of is going to affect the way that retail is perceived. You still have a lot of these, malls out there, these B and C malls, regional malls, that they're going through redevelopments, that are going to continue to go through redevelopments as the retailers decide to go to different venues online and other things. So I think that's going to be a story that's going to play out. I think if you talk to mall owners, they're pretty excited about getting rid of some of these tenants so they can redevelop the space into theaters and restaurants and more destination type things.
Great. Ross, thank you so much for joining us.
Thank you, appreciate it.
For more information on this and other REIT news and analysis, be sure to visit NAREIT's website, REIT.com.